Imagine walking into a bank and being treated like your financial life is flawless. You apply for a credit card and get approved instantly. You finance a car and receive one of the lowest interest rates available. You apply for a mortgage and save tens of thousands of dollars over the life of the loan. All because of one number, your credit score. And if that number is 850, you have reached the highest credit score possible in most major scoring systems, including FICO. But here's what most people get wrong. An 850 credit score is not reserved for millionaires. It's not about being born rich, and it's not about taking on huge amounts of debt. It's about understanding how the system works and using it correctly over time. In this video, I will show you exactly how credit scores work, what habits matter most in the step-by-step process that can move you toward a near-perfect score. An 850 credit score tells lenders one thing: you are extremely unlikely to miss payments. That makes you a very low-risk borrower. In practical terms, this can mean lower mortgage rates, better credit card approvals, lower car loan rates, easier apartment approvals, better insurance pricing in some states. That said, there is an important truth. There is very little practical difference between a score of 800 and 850. Once your score is in the exceptional range, lenders already view you as top tier. So the real goal is not perfection. The real goal is building habits that make lenders trust you. Step 1. Never miss a payment. Payment history is the single most important factor in your credit score. One late payment can damage your score and remain on your credit report for years. This is why people with outstanding scores almost never miss due dates. Set up automatic payments, calendar reminders, spending limits so your balance stays manageable. Even if you cannot pay the full statement balance, paying on time protects your payment history. Think of your payment history as your financial reputation. Every on-time payment strengthens it. Every missed payment weakens it. Step 2. Keep credit utilization low. Credit utilization is the percentage of your available credit that you are using. If you have a $10,000 total credit limit and a $1,000 balance, your utilization is 10%. Lower is generally better. Many people aim to keep utilization under 30%, but people with excellent scores often keep it under 10%. For the strongest results, some maintain it in the low single digits. Ways to lower utilization: pay balances before the statement closes, request higher credit limits, spread spending across multiple cards, avoid carrying large balances. High utilization can signal financial stress even if you pay on time. Step 3. Build a long credit history. The age of your accounts matters. Lenders prefer to see a long, stable track record. This means keep older accounts open when practical. Avoid closing your oldest credit card without a good reason. Start building credit as early as possible. Someone with 20 years of responsible credit use has a stronger profile than someone with only 2 years. Time is one of the most powerful tools in credit building. Step 4. Use different types of credit. Credit scoring models reward experience with different forms of debt. This may include credit cards, auto loans, student loans, mortgages. You do not need every type, and you should never borrow money just to improve your score. But over time, responsibly managing different credit products can strengthen your profile. Step 5. Limit hard inquiries. When you apply for new credit, lenders may perform a hard inquiry. A few inquiries are normal. Too many in a short period can temporarily reduce your score. Before applying, compare options. Apply only when needed. Avoid opening multiple accounts impulsively. Responsible credit users are selective. They do not apply for every promotional offer they receive. Step 6. Monitor your credit reports. Errors happen. Incorrect late payments, outdated balances, or accounts that do not belong to you can hurt your score. Review your credit reports regularly from Equifax, Experian, and TransUnion. You can access your reports through annualcreditreport.com. Check for wrong balances, incorrect payment history, unknown accounts, and personal information errors. Dispute inaccuracies as soon as possible. Step 7. Let time do the heavy lifting. This is the part many people do not want to hear. There is no overnight shortcut to an 850 credit score. You cannot manufacture decades of positive history in a few months. People with top-tier scores usually share the same pattern: years of on-time payments, low balances, mature accounts, and conservative borrowing habits. Credit excellence is built slowly, and that is exactly why lenders trust it. A simple example. Imagine two people. Sarah pays every bill on time, uses less than 10% of her available credit, and keeps her oldest accounts open for years. Jake frequently maxes out his cards, applies for new credit often, and occasionally pays late. Both earn similar incomes, but lenders will view Sarah as significantly lower risk. The difference isn't income, it's behavior. An 850 credit score is not about perfection. It is the result of consistent habits repeated over many years. Pay on time, keep balances low, protect your oldest accounts, apply for credit thoughtfully, monitor your reports, and be patient. Master these steps, and you may not only build an exceptional credit score, you may save thousands of dollars and gain access to some of the best financial opportunities available.